My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. In middle of May, prices started breaking down from an earlier bullish Andrews pitchfork that had until then guided prices higher. On the way lower, the market made a mid-June to mid-July bearish halfway hesitation, moving lower but not really fulfilling all its potentials on the downside, as the market reached down to the very significant lows of late November 2023 plus January and February this year, down in the 15,840 zone. At this point, the market in late July cracked the downtrend that prices had been riding lower since mid-July. In many ways, this was not a surprise, not at all. It is at this point that I feel obliged to mention once again the big descending scallop pattern idea that I had been going on about for a month, and what it may mean within the near-term universe. So the key level, as I've already mentioned, are the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it, a significant move below this would give a potential for the descending scallop pattern on the downside down to the 13,830 zone, which is not too far away from the potential below for the old bearish halfway hesitation seen over June and July. Thus, it all came down to what the market would do once prices reached the 15,840 zone. Well, the market chose to bounce back upwards and over the start of August sustained the bounce, moving higher, slowly higher overall. Though for the last 2 weeks, prices had an issue with testing June 2021 low at 17,095. And I suspect indirectly the flatlining gold long moving average just above at 17, currently at 17,325. This ties in with the idea I put forward 2 weeks ago of the action over late July to August possibly being a mini cup with handle pattern. Now, I'm not happy with this pattern idea, but I thought it was worthwhile mentioning it. The pattern itself is deficient in that apart from being short in time, it is higher on the near side. Despite all that, it looked like it was working well last week as prices neared the primary target X in the 17,200 area and a secondary hard to reach target X1 up in the 17,470 area. However, since then prices have turned back down away from the June 2021 high and under the green short medium moving average, currently at 16,680 and the May 2021 low at 16,610. It was as I said last week when voicing my doubts, and I quote, "My only concern is the ammunition we've accumulated during July and August may not be enough to tackle all these resistances on the upside, but we shall see." End of quote. Well, so far the resistances have capped the market. However, in doing so, they have shown perhaps another pattern development. It could be that the whole action since late July was becoming a cup with handle pattern may also have developed into a mildly upward pressing rising wedge pattern, currently 16,460 to 17,280. Now, the lower trend line to this is not fixed. It can become shallower and even make this into a mildly bullish bull channel. But by doing either of this or the rising wedge pattern, it still keeps target X and X1. It still keeps them alive. It all depends on the congestion developed over August between roughly 16,050 to 16,450, wherever this holds. At the moment, it is being tested today, right now. So watch with care. LME 3-month zinc. This is a very busy and colourful chart. For that, I apologise. But all these patterns do relate to what is going on right now. So let me explain. Prices peaked this year at the neckline of the September to December 2022 reverse head and shoulders pattern with a horn top in late May. The market moved back down, rejected by this neckline, reaching the primary and secondary targets for the horn top, but the decline became more hesitant in mid-June, especially when it tested the interesting support, currently at 2820, the dark blue broken upper tine of the old May to August 2023 bullish shift pitchfork that had acted back then as an August 2023 to April 2024 upper bull channel line. Now, I would normally have retired this broken pitchfork, but this pattern still resonates even today. Anyway, I said 12 weeks ago, and I quote, "This is the first decent support we have seen, though I would not be surprised if prices do move further down near the middle tine." That's currently at 26.58, end of quote. And prices did drop down, just below the middle time in early August. But this drop was not singular, rather it was part of a late July to date small reverse head and shoulders pattern, with a highlighted purple neckline on my daily chart, currently at 28.68. Last week we saw prices drive higher, not only over this purple neckline, but also over the June 2021 low at 28.10, the old dark blue upper time, the green short medium moving average currently at 28.17, the mauve medium moving average currently 28.63, and also the bright red upper time currently 28.14 of the late May to early July bearish shift picture, which I only drew 3 weeks ago. This also counters quite strongly July's monthly key reversal down. Consequently, last week laid out some potentials topside for the reverse head and shoulders pattern. Thus, a primary target X would be in the 30.09 area, with a secondary harder to reach target X1 in the 30.87 area. What we had in the way to stop it was and is the congestion band between 29.58 to 29.65, containing the April high, 2019 high at 29.59 and the 50% Fibonacci line with a big old 2008 to 2022 move at 29.65, plus the green middle time of the February to August bullish shift pitch hook, and then just over the 3000 level, the July high at 30.22. There did not seem to be much else apart from these immediately overhead, but they were enough to turn prices lower, especially I suspect the green middle time, such that this week we are testing back down below the purple neckline and to the congestion at the dark blue and bright red upper tines and the June 2021 low, the whole mishmash of it. Below these we don't have much bar the congestion generated during late July and August. I'm not sure how good these are, but time-wise they are not very big. My main concern is what exactly is the reverse head and shoulders pattern. You see, usually they are seen as bullish reversal patterns, however they can also be the rarer bearish continuation patterns. Right now I'm still minded to look at it as a bullish reversal pattern, but I will now add question mark to that statement. LME 3-month tin. Over April and May we saw the market form a double top, Adam and Eve type, leading eventually to the creation of an April to July triple top. It also clarified the April to July sideways triangle, which I had first a false break on the top side, but then a proper break lower late 7 weeks ago. The market followed on with a move down to the primary target, but not the secondary hard to reach target. Likewise for the triple top, prices reached down to the primary target, but not the secondary harder to achieve target. On the way down, we saw congestion between 28.835 to 29.005, containing the July 2011 high at 29.005, plus the slowly rising long moving average, currently 29.250, and the nearby neckline extension of the October 2023 to January 2024 reverse head and shoulders bottom, currently 27.940. And finally, the 50% Fibonacci line of the March 23 to April 2024 move at 27.330. All these stopped, and the start of August turned the market higher. In hindsight, I suppose you could also throw in the dark blue middle time, currently at 26.725 of the April to July bearish Andrews pitch hook as well, but I'd personally stick to the gold long moving average in the congestion zone. Since that time, or since that push back up in late July, almost looking like a double bottom, prices have risen, gotten stuck in what I can best describe as an accidental congestion area overhead created by the mauve medium moving average, currently 32.275, the green short medium moving average, currently 31.890, the 50% Fibonacci line, the March 2020 to March 22 move, as currently at 31.845, and the neckline of the thin and tall April based head and shoulders pattern. Yes, that thin one. The one mentioned a lot back then, currently at 31.775. I said last week, and I quote, "This accidental area is actually the gateway to a whole load of congestion overhead dating from early April until mid-July. I have doubts about whether the market had the ammunition or the inclination to take things higher, but higher we have moved, breaking up over all those previously mentioned resistances, turning them into supports, and notably over the dark blue upper time, currently at 31.085. That's the end of the quote. 2 weeks ago, I also pointed out how beyond these, and I quote, "we have little in the way until the previous all-time high in April 2011 at 33,610, and the 50% Fibonacci line of the March to October 2022 move at 34,175, the latter being a significant level, end of quote. All this looked good for a break higher, but the market was reading a different script, turning lower and down through all those previously listed supports, such that we are now approaching the July 2023 high at 32.05. Not that far away from it. To take this turn of events into account, I've drawn a bright red mid-July to late August bearish shift pitchfork. The market is at this moment in between the upper time above, currently at 32,965, and the middle time below, currently at 29,860. Now, I've chosen the shallower bearish shift pitchfork instead of the more usual and aggressive bearish Andrews pitchfork here, as I think it better matches in sympathy with the larger dark blue April to July bearish Andrews pitchfork that had sort of shown the area where support might come in during the turn of July into August. I'm not in love with this bright red pattern, and I would morph it into the more acute bearish Andrews pitchfork in a heartbeat, or even retire it completely if another better pattern developed. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.